there any evidence that active ownership works in terms of, because Cambridge often uses that as an excuse to not divest?
Very good question, and I think we should be cynical about this.
I agree.
Yeah, I think actually CCLA has done some really interesting work on this, but just as there's no real evidence that divestment has hurt the companies involved or changed things directly in that sense, there isn't good evidence for active ownership making, especially the kinds of rapid changes we need. We need decarbonization of the entire economy in a few years, and there's nothing to indicate that we're getting close to that through active ownership. So I think cynicism is warranted.
So the so-called optimistic view, I completely agree, and people use engagement as an excuse to invest in companies that they should not be investing in. So engagement can move companies forward. Whether it's quick enough or not is a real question, but the question you have to ask is, what has it achieved and what are you hoping to do?
Clare has 2 tracker funds, so that just means basically a representative slice of everything that's listed on the stock market. So this is a passive fund, and they have those with State Street and with HSBC. And there is a website in the US, it's a nonprofit organization called CSIS. They have a list of all the shareholder resolutions that relate to climate change and some other issues that we would all care about. They should be ensuring that our shares are voted in alignment with all of these resolutions. There's really no excuse for doing otherwise.
In the most recent year for which the data are available, State Street supported 38.5% of those specialist shareholder proposals on climate change. Legal and General Investment Management, for example, supported 84.6%.
Investors absolutely have a role to get out there and make the future that we want to see. It is in our interest from a financial perspective to limit to at least well below 2 degrees.
I don't think we should be saying we're not going to be hitting 2 degrees, because we have to hit 2 degrees.
If you're familiar with systems theory or systems thinking, the most effective level at which to intervene is what system thinking calls paradigms. It's basically the ideas and the mindsets and the assumptions inside our heads on the basis of which decisions get made that then create the world that we find ourselves in. And the way to change paradigms is just simply to keep on demonstrating the new paradigm.
So if you were to come to me and say, I want to divest from fossil fuels, my immediate pushback to you would be, in trying to set that definition, what is it you're trying to achieve? And if you're trying to achieve kind of resilient portfolios into the future, that would mean a certain type of divestment. If you're trying to achieve, I want to be happy, my charity is Friends of the Earth and I don't want to be anywhere near this, it's going to affect my reputation, you would take a very strict definition. So our view is that there is no one definition that can work for everyone. It's about conversation about what do you want to do with your money, what is it you're trying to achieve, and then we work together to agree what it means, and then most importantly, implement it.
I manage a network of foundations that want to align investment practices with their charitable objectives. Some of them have divested fully and very publicly from all extractive industries, all high carbon industries, so cement, steel, etc., all weaponry, all so-called single stocks, so alcohol, gambling, etc. But also things like supermarkets, because they are high carbon industries. So you really can take it a long way.
I guess one of the things that we see, which is really disappointing, is this idea that ESG can be used to generate short-term alpha, so outperformance. So we see all kinds of investment managers saying we're doing this now to boost our short-term returns, and quite frankly, it does not matter what your short-term returns look like if we don't solve climate change, because long-term returns are going to look terrible.